New all-time highs in the markets. Question is, where do we go from here? What is going on, everyone? Jeremy Hritz here. Courage pays better than fear trading. Happy weekend. I'm recording this on a Friday, publishing it on a Saturday. And I want to start just by wishing you an amazing weekend. I hope you have a great, relaxing time with family and friends. You get to enjoy yourself, rest up, and get ready for the final week of October, final trading week. Hard to believe this is it. In what is supposed to be a very bearish month, it's supposed to be where dips bottom, market corrections bottom, bear markets bottom. But we just made new all-time highs. The SPX closed up 53 points. On Friday, it actually broached 6,800 on the SPX. And a lot of things just pushed higher. And we were kind of questioning there for a period of time after Trump announced the new tariffs on China a few Fridays ago, whether or not this was the start of a major correction. And while we did drop, I think around 3.31%, that was it. The bulls stepped right back in, bought this thing right back up. And now we sit here at new all-time highs heading into the weekend. What a difference a week or two can make in the markets. And that's the thing. It's you just never know. And that's the volatility of the markets. That's what makes it so much fun. And the question that I said at the beginning here, where do we go from here? And a lot of people are going to say, oh, we're overextended. We're due for a correction. We're due for a pullback. We are, but we've been saying that forever. We've been saying that forever. And every time we get a little bit of a dip, we get a little bit of volatility, what happens? The bulls step right back in. They buy it back up. We get a counter tweet or counter message from Trump saying, oh, yeah, you know, I have a great relationship with President Xi. We're going to work this out. We'll have a deal on the table. And things just stay resilient and move higher. And that's kind of the market that we're in right now. It is very sensitive to geopolitics and tariff news, but let's look at the catalyst for why we had the move higher today. And really the move across the board took place pre-market. And we really just kind of chopped after that move in the regular market hours. Gave some of those gains back, but not a lot. Being up 53 points, that's quite the move. But we're heading into what is typically the strongest time of the year, and that is November through April, the best 6 months of the market. And this run has really been flying in the face of seasonality. The weakest months, August, September, October, have been strong months for the market. They've set new all-time highs, and you have to wonder, well, is the other shoe going to drop in November when everybody is thinking, hey, we're going to rally into the end of the year? Did we fly in the face of that sentiment? And do we finally correct? Do we finally make some lows? Do we finally get a dip? We'll have to see how it all unfolds. But the beautiful thing about next week is we get more earnings reports. And if you look at the reports that we had this week, the two major, most important ones, Netflix just got absolutely demolished, crushed. It is now down below its 200 simple day moving average. And it actually dropped a little bit more today. It's probably going to consolidate down there for a little bit. I actually sold one put yesterday. That's down, but it doesn't expire until December. So I'm going to capture that premium on the big drop. And then you had Tesla, and they didn't have a good response to their earnings. Although yesterday we saw it get bought back up, but today we saw it drop right back down. So a lot of volatility there. But now heading into this coming week, we have Amazon, Apple, Meta. We have Microsoft, who's going to report. And the thing is, they're not going to gap all of those big boys down. They're just not going to do it. And so of those four, more than likely 2 of them will get a gap higher. And just looking at the technicals on the charts, let's throw Google in there too because they're reporting as well. Google at all-time highs. It's due for a pullback. Doesn't mean it's going to happen. If you look at Meta has a nice setup. It's actually filled its earnings gap from the last time when it had that massive move, filled the gap, and now is double bottoming and is set up for a nice move. Nice compression by the moving averages there. So let's see what that one does. I'm sticking with my call for a $1,000 target before the end of the year. We look at Apple. Apple continues to push, made new all-time highs. What are they going to do on earnings? You then look at Microsoft. After hitting its all-time high, it's just kind of been moving sideways, consolidating. How is it going to report? And then there's Amazon. Finally made a move today, closed around $224. And so of those remaining magnificent 7 stocks, who's it going to be that is going to pump? And if we're just looking from a risk to reward scenario, Amazon has the most potential because it hasn't hit a new all-time high since January. So that's one that I have my eyes on to see if that can make a push, or maybe it's going to get dropped and there's going to be more weakness there. Maybe they'll just continue to run Google up. Who knows? But next week is surely going to be exciting. And then we also have another company reporting next week that I'm very excited about. That's going to be Roblox. They're actually reporting on Thursday. And they actually report in the morning before market open. And the growth of this platform, what they're generating in terms of average daily users, the revenue that they're bringing in, they are poised to smash records. And so I think there is a really great opportunity there on Roblox. And it's really just been kind of choppy, moving sideways since it gapped up the last time. If you look on the charts, it gapped up on its last earnings report, and then tons of people took profit. Yeah, a lot of shorts that probably jumped in on that, wrote it down, and it's really just kind of done a whole lot of nothing. And every time it's got up into the 138, 139, 140 area, it's been rejected. Today it closed in the 128 range after getting a little bit of a push up into the 131s. So I'm really curious to see how they report. You had a lot of analysts raise price targets on that one. But you also have people in the bearish camp on Roblox who say it's overvalued with all the pressures from the child security perspective of it. You know, it's hard to tell what's going to happen on the earnings report. I like this company long term. I have leaps on it that don't expire until 2028, January 2028. So I'm committed to it for the long haul, despite what happens on earnings. If it were to have a significant move lower, I would add to that position. But I'm very curious to see how they report. I think their numbers will be good. I think they'll beat on earnings per share. I think they beat on revenue. Forward guidance, I think, will be good. But remember, when it comes to earnings, that doesn't mean a whole lot of anything, right? There could be one number that institutions don't like and they drop it. So can't wait to see how they report. But there's going to be so much volatility in play next week that I just can't wait to see it. And I started talking about this earlier. I didn't mention it, but the whole reason we got a pop today was because CPI came in cooler than expected. That's what caused this whole launch. I talked about that yesterday's episode of Driven. So the Fed it's cemented. They're going to cut rates next week. There's more volatility to throw into the markets. Wednesday, that's when the rate decision's made at 2 p.m. Powell presser at 2:30. So let's see how Papa P comes to play. I'm going to be live streaming that. So can't wait to see what he has to say. So next week's going to be fun. It is going to be fun. I can't wait. I'm here for it. I'm sure all of you are as well. And let's make it happen. One last thing. I got to recommend this book. The 1929, Andrew Ross Sorkin from Squawk Box. Almost finished with it. I got like 20 more pages. Read it. If you love the markets, you want to learn about the Great Depression, the crash from 1929, read it. It's such a great read. I've read it in 4 days. I'm almost done. So I want to throw that recommendation out there. Sign up for the Trading Psychology class. It's kicking off in November. And that's it. Have a great weekend, everyone. I'll see you next week. Make it a great day. And as always, honor the moment.